Hi, today we're going to talk about small-time investing. How do you buy a stock like Amazon that's selling for over $3,000 a share when all you have is $100? That is the subject matter, and I'm going to show you a couple ways of doing exactly that today. In recent videos, I showed you ways where you can start investing in gold with as little as $65 and in silver with as little as $25. Today we're going to show you how you can buy into the stock market with as little as $1, believe it or not. There's a couple of ways of doing that, and that's what we're going to show you today. So we are going to use Amazon as an example, but it's just an example. I'm not telling you to buy or sell Amazon or any other stock. And what works for one stock will work for all the stocks. So it's just, I'm telling you how to do things. And I might give you a couple ideas of things to look at, but I'm not telling you to buy or sell anyone in particular. So let's get started. Let's say you do want to own Amazon, and it is selling for over $3,000 a share, and all you have is $100. So the first thing you want to look at is the actual reason why you want to own Amazon or any other stock for that matter. Is it, in Amazon's case, is it because it's going to go up $300, or is it because it's going to go up 10%? Those are one and the same answer. 10% of $3,000 is $300. So what you really want is that percentage gain is what we're after when we're investing money into the stock market. So if that's what we're after, it no longer matters if we own 0.1%, a half of a share of stock, an entire share, or 10 shares of stock. We're going to get the same return so long as we don't have to pay a premium to get the smaller shares. And we're going to show you exactly how to do this without paying the premium. So here we go. The first thing we want to talk about is ETFs, exchange traded funds. ETFs, exchange traded funds, are like a mutual fund, but they sell like a stock. I would say ETFs in general are more focused than a mutual fund also, such as a lot of times they only invest in a particular type of industry, but that's not always the case. Such as some of your big ones, the SPY is the tracking stock for the S&P 500. Of course, it represents 500 companies, so that's not very focused. Anyway, so exchange traded funds, they're easy to buy because they buy and sell just like shares of stock do. The other thing is you can buy a lot of these in something called fractional shares, of which we're going to talk about that next. But first, let's look at the ETF. So if you wanted to own some Amazon, but you can't afford a full share of Amazon, you could buy a share of an ETF that has Amazon in it. So one of the websites I love to come to is this one here. It's called ETF.com. And when I asked it, okay, how many ETFs have Amazon in it? As you can see, it shows that there's actually 281 ETFs that have Amazon in it. Then when you scroll down, you can actually see ETFs with the most Amazon exposure. These are the ones that have the biggest percentage of their ETF is in Amazon stock. The top performing ETFs with Amazon. So there's lots of ways you can get lots of ideas here. Here's the SPY and the QQQ. Those are two of your biggest ones. Of course, this SPY is your top 500 stocks in America. The QQQ is the top 100 technology stocks in America. Anyway, so you can find lots of ideas of how to buy Amazon through an ETF right here. Now, along with Amazon, I'm going to sidetrack here just for a split second. Along with Amazon, the top 5 stocks in America right now, they're called the FANG stocks. And FANG stands for Facebook, Apple, Amazon, Netflix, and Google, which is now called Alphabet. But I don't know if you could see that or not right here. I could jump in here a little bit closer for you. So like I said, it's Facebook, Apple, Amazon, Netflix, and Google. So those are your top 5 stocks in America. They have the highest weighting on the S&P 500, and there is no one ETF that has just these 5 stocks in it. Now there's lots of ETFs that have all 5 of them, and we'll show you that. Oh, that's this page right here. And it shows you once again all of these ETFs have all 5 of the FANG stocks in it. But no one ETF has just the 5 FANG stocks and nothing else in it. And that might be something of interest to some people. Some people might say, I just want the top 5 stocks in America. I don't want to own anything else. In that case, then we look at what is called fractional investing. So what fractional investing is, it means that you can buy just a fraction of a share, and rather than go by percentage, they go by dollars. So if you had $100 you want to put in, which is where we started this video, you can just buy $100 worth of Amazon or Facebook or Netflix or Google or whatever. There's only a few brokerage firms that are doing it right now, but here is the list of them. One of my other favorite websites, as I'm sure you all know by now, is Investopedia. You can find just about any kind of information you want in there. And so they tell you who's doing fractional shares and what their minimum is and everything else that you really need to know. So Charles Schwab is in here, but Charles Schwab only does the S&P 500 stocks. So if you want ETFs, that's not going to work with Charles Schwab. Fidelity does all the stocks listed on the New York Stock Exchange and the NASDAQ, and therefore they do have almost all the ETFs in it, especially all their own ETFs, all Fidelity's own ETFs. And if you remember back on the other screen, one of the top ETFs that has Amazon in it is a Fidelity ETF. So anyway, minimum purchase is just a penny. I would probably open my account with a little bit more than that. They say it's funny, when you go to their website, it says it only works with the mobile apps, which means through your telephone. But I actually called them, and they said, no, it works fine with desktop also. So you can buy most of your ETFs, any other stock on the market. And this gets interesting because, remember I was just saying a minute ago, there's no one ETF that has all 5 FANG stocks in it. Well, let's say you have $500. You could put $100 into each of those top 5 stocks, and you would have your own little 5-stock ETF, basically. And next time you have another $250 or $500, you throw in another $50 or $100 into each of the stocks, and you could build your own. So I think that's pretty neat that we can do that now. I remember when I first started trading, we had to trade by 1/8 of a point, which is 12.5 cents. You couldn't bid or buy by the penny, and now you can. So it's pretty neat. This is a really big firm, Interactive Brokers, and they were actually one of the first ones to come out with fractional shares. They do most exchange-listed securities, including over-the-counter, which that's a little unusual. Over-the-counter are your really risky little penny stocks in that. They do have minimum purchase of $1. Their website is kind of confusing because it talks about the fees, and so it talks about a minimum, but then there's also a computation that you go through, and they seem to contradict each other, but it doesn't seem to be very expensive. It's definitely it's worth looking at them, especially if you want to buy some of the smaller stocks or whatever. Of course, then you probably won't be doing over-the-counter stocks if you're talking real cheap stocks to start with. M1 Finance, I don't know a lot about them, but they are listed here. And then, of course, Robinhood's gotten very, very popular. I don't want to say anything bad about any of these companies, but I would say go look at some reviews before you decide which one you want to use, because a lot of them have stronger points, some of them have weaker points. And so I think it's important that you know that. My first choice, if I was to pick out of this group, my first choice, of course, would be Fidelity. They're long established. They've been around for a long time. They've got a really good name, a really good reputation. So there you have it. If you want to buy $100 worth of Amazon, now you have a couple ways of doing it. You can either do it through the ETFs, or you could do it through fractional shares, or you can do it through a fractional share of an ETF. So for instance, one more time, the S&P 500. So this is Yahoo Finance, and this is the SPY. It says it right here, SPY. So that's your tracking stock for the S&P 500. As you can see right now, one share of the SPY sells for $355.35. That was the closing price on Friday. If you wanted to buy $100 worth, you could buy basically a third of a share for $100, and the SPY has Amazon in it, as we saw through one of the other websites there. So there you have it. There's a couple of ways for you to be buying stocks or starting to invest, even if you only have $100 or a couple $100, or for those people who have more money but they just don't want to put a whole lot into the stock market, but they'd like to stick their toe in the water and buy a little bit of one or two stocks. There you have it. If you have questions or comments, please leave it down below in the comment section. I will put links into both of those other websites that I showed you, ETF.com and the other one, so the top FANG stocks. Okay, talk to you later. Thanks. Bye.